Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about FL India, a stock analysis that has been in demand for the last few weeks, I think at least a couple of months. And today I'm going to analyze this company for you. And let's understand what the company does and whether you should buy into the stock at these steep levels or you should avoid it. So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I start with the analysis of FL India, here's a small request that kindly support me on Patreon, and if even if you support me with a $2 increment per month, that's 140 rupees per month, it will go a long way in supporting me for the channel, and I'll bring up with more interesting videos, live chats, live streaming, and analysis of the markets daily, and try to put up videos daily. Also on Patreon, you'll be able to have a number of articles. So rather than videos, I'll put up nice long articles for you. And if you want, I'll do personal portfolio analysis as well as stock analysis for you for minuscule amount. So kindly look at the tiers at Patreon and become a patron of mine. Now about FL India. It was established in 1994, and they provide online and mobile marketing solutions. So they are into the online domain and they provide mobile marketing solution. Now understand this business that whenever something gets streamed on your mobile phone or you watch some video on YouTube, etc., and also you watch some ads there, so the online ads or the mobile ads and the marketing stream or the marketing management online is different from what it is for TV commercials. And these online advertisements, the back end operations of it, the software of it, the technology of it, as well as the way the online ads would be streamed, etc., comes from FL India. So they are into that mobile technology, they are into robotics, they are into this Internet of Things, and everything that is currently as the know-how of the technology in the you can say online marketing domain. So they are into it, and they are into it for the last 25-30 years, and that is why this company has remained so expensive ever since it got listed, and people were not able to find out as to what the company used to do. At least I was not able to comprehend as to what the company used to do, and the valuation started to go up from 40-50 times to nearly 100-120 times. And this was the prime reason, because I cannot find, and I was not able to find any peer comparative to FL India. The closest we get to is Tanla Solutions, which provide Internet of Things and mobile marketing, as well as you can say that mobile technology for messaging, etc., in which they are doing well. And the acquisition that they have done of Gamoga itself does similar work as FL India does. So they have acquired a major portion of Gamoga as well, and its revenue is also reflected in Tanla Solutions. So I cannot find a pure listed company similar to FL India, and that is why scarcity premium also goes on for FL India here. The main segments involve, as I said, mobile advertisement, fraud detection, programmatic ad platforms, audience intelligence, and many more. So audience intelligence, understand this part as well, that whenever an audience watches some video, searches about something on Google, etc., it all goes into the back end of you can say into the memory of the internet. So the companies know as to what you are searching or what's on your mind, and these all things that happens, the technology behind it is what FL India means provides, and they provide then strategic decision makings for online advertisers as to how a consumer is looking at something, and what they might desire, what would be the want of a company, so what consumer. So understand that this company would be probably the future of advertising, future of marketing over the next 10-20 years. We talk about digital marketing and the art behind it, the science behind it. FL India could be that sort of a company, coming at only 5,500 crores. I believe it is coming at a very low market cap for such a business. I'm not saying that it is not expensive. It is extremely expensive. Even after the fall, it is extremely expensive even now, although it has become a little bit cheaper. But the business is top class, and if they continue to give results as they are doing and keep debt in check and do one business and don't get into a number of businesses, then we could see this company become manifold in the years to come. If you look at the financials of the company, so the sales have grown by 27% year on year, whereas the profit growth has been around 32%. So 16 crores have become 21 crores in this year on period, and that is a magnificent profit and sales growth considering it is an IT firm. So if you consider it as an IT company, or and then a growth of 10-12% would have been good. Here the growth is around 30-35%. There's absolutely no debt, and look at the return on equity. So a return on equity is a measure of the profitability of a company or efficiency of a company. And if you look at it, 67% is just unprecedented. And this is the biggest reason why the stock is trading at the valuations it has been trading at. The operating profit margin is around 28%, which is strong as well. If you look at the performance of the company, so the stock is up more than 2.5 times since IPO. It has corrected around 10-12% just recently. So from the highs of 2300, it has gone to 1700. The correction has been very quick. 23-24% correction has taken place inside a week, and that was due. And that was what I was saying, that all these marquee stocks, expensive stocks, will correct. Whether they'll correct 30%, 10%, 15%, I don't know, but they are to correct. And that is what has happened yesterday. We saw that mega fall in most of the stocks, including FL India. And I want to make a disclaimer here that I bought into FL India tomorrow. Not a lot, I should have bought more considering how the Dow Jones ended. But then I'll definitely buy more on any declines or any move above 1900. I'll talk about the technicals just later on in this presentation. But the stock is already up 2.5 times since its IPO because the valuations were pretty cheap at that point of time, considering the kind of growth that it is doing. Uh, there is strong institutional investment, and remember, only 3.5% free float. This is the most important part. So 96%, over 96% of the stocks in the market are taken up by high net worth individuals, FII, DIIs, or the promoters. So very few shares that are with the retail investors, and that is what I like. The major portion of the investment, just like in DMart, just like in say Dixon or any other company, the major portion of the stocks are with strong hands, and I do not see them selling big time, although there was some profit booking that we saw yesterday. But I believe having only 3.5% free float, you need to get into that stock for a company that is only 5,500 crore. For that to have only 3% free float, 4% free float, that must be a very good company. So numbers have been robust over the years, and the return ratios I have just mentioned is absolutely magnificent. So as I mentioned, the numbers have been robust, and we have seen 30 odd percent growth on the profit front year on year this quarter, but last quarter had been over 40%. So it has been strong numbers over the last 3-4 years, and the return ratios, as I mentioned, 67% ROE, that would reduce. So the ROE may go to 40%, 35%, but that is also extremely strong considering we consider return on equity of 25% very good. We have seen that Page Industries over the years since 2009 till now has given ROEs of 50%, 45, 50%, and it turned out to be one of the biggest multi-baggers. So if FL India continue to have a very strong return on equity of over 40%, we could see stock doubling extremely quickly. The profits and sales are not only growing, but they are expanding, and they are getting into, I mean, the market share is increasing every day. And the kind of business that FL India is into is mouth watering at the moment. If they have their, you can say, heads on their shoulders, and they do their business correctly, this could end up being a mega cap over the years, over the next 10, 15 years. Absolutely no debt at the moment. So, what are the concerns with the stock? The valuations are extremely expensive, and remember that I made this video about 4 5 days back. So this was before yesterday's fall. So after yesterday's fall, the valuations have become slightly reasonable, and you need to understand that 1700 is the 50 DMA, and normally large stocks or very good stocks with very good pedigree and profit growth normally correct to around their 50 to 80 DMAs. So it corrected to its 50 DMA and bounced from it. So we might not see more correction in the near term, but eventually, if it goes below 50 DMA and comes to around 50 to 100 DMA, as I said, it will be very good buying opportunity. The return on equity is extremely unsustainable, and that is one of the concerns. So what if the ROE goes down to 25 30%? What would be the valuation? Will the profit growth comes down in the teens, and then the valuations or the PE comes to around 35 or so from the current 70? So these are the concerns, because these are very high valuations. But again, the kind of business that they are into, they might just continue to make 40%, 45% profit growth year on year for the next 3 4 years. Then what would be the valuation? So it is quite a difficult thing to understand, and quite a difficult prediction to make. The only thing we can do is go on current numbers and consider the valuations and get into the stock. uh, Technology is another concern. Technology is ever evolving, so it could be that over the next 2 3 years technology moves to another platform on which FL India might not be able to do that good, and maybe other companies or some other company or competition might sprung up. So you need to have that thing in the back of your mind. But considering the kind of things FL is doing, they might be aware of the same things as well. uh, the run up in the stock is extreme, and so you might not see any returns in the next couple of years. And in my suggestions later on in this presentation, I have talked about the fact that this might not give you returns over the next 6 8 months, but it is a very good investment to make for many years, say 7 8 10 years, if the company continues to do well on the structural front, on the corporate governance front. Now large investors may look to book profits at some point of time, and that is might have what have happened on Friday, when the fall happened from around 2100 all the way to 1800. I believe that some of the large investors might have gone out, but the business remains intact. So it is not that the business is closing down or something like that. Yes, the virus scare is there. It may stay here for another 3 months. It might stay here, because of which the economy might plunder for the next 3 quarters, 4 quarters, but eventually we'll come through it. And we could see the stock go to even 1400, I don't know, from here, or we could see the stock rebound from Monday. But the point is, top businesses do not come cheap, and any sort of decline, this stock has declined 20 to 23% from the peak, and this was what I was looking at. Should be a buying opportunity, any kind of decline, and this sort of decline what happened on Friday was a big buying opportunity for sure. So why a buy on decline? It is a market leader in the space that I just mentioned, and gaining market share all the time. So it is going to become even bigger in the years to come. And just a 5,500 crore market cap, I keep stressing that fact. For the business that it is doing is extremely low. It should have a market cap of at least 30-40,000 crore, but I don't know when it will reach there. The return on equity is extremely strong. Operating profit margin at 28% is extremely strong, and this is a niche segment leader, having this is having much virtual monopoly, at least in the listed segment. So there is no competition in the listed segment. So anything that happens in this sort of technology outside the markets or in externally would have an effect on this stock, and we could see many things happen in this type of mobile technology and advertising as more and more people go into buying subscriptions for Netflix, Amazon, uh, etc., rather than going for normal television channels and buying into it. In fact, they are watching television channels online as well with the advent of Geo, and the kind of internet penetration that is happening today compared to a decade back or 5 years back, it is unprecedented. And that's why all these things play out with this stock. So you can play all these themes through FL India, and that is why I guess the valuations have steeped out. Absolutely no doubt, no debt, and that is another reason why you would like to get into the stock. And of course, I've talked about the market cap. If you look at the technicals of the company, Friday may have seen major fall. Why I say that is that I was looking at whether when would it come to its 50 DMA. The 50 DMA is at 1710, and the stock fell to 1725. So if you take into account another 2-3 days, it would come to around 1720, 1730, and that's where the stock made its low and then rebounded back big time and closed at 1800. With the Dow Jones in green, I can see another 2-3 percentage point up move in FL India, and probably from Tuesday we could see a little bit of correction. So anywhere around 1700, 1600 is a very big buying opportunity. Those who have not bought into the stock was extremely overbought at 2300, 2100, etc., but at 1700 or below it is a good buying opportunity because profits will expand. It has no relation to the coronavirus scare that is happening in China or other parts of the world. They are doing their own business here in India and supplying abroad. So if things doesn't go bad here in India, FL India would continue to do well. It doesn't require any raw material as would some companies in the textile sector or in the auto sector would do big for components and raw materials. So get into this stock on corrections closer to 1700, 1600, or on any dips, and don't get into it at 2200. So what needs to be done? Buy at current levels and on any sort of declines. Friday was a huge opportunity to get into the stock. Keep a 7 year view, keep a 10-12 year view. I have a 10 to 15 year viewpoint here, and I'll keep buying on any dips. Buy it as an SIP. Don't buy it immediately because you might burn your hand. So buy it on any sort of dips, just like the dip you had in Friday, and keep on adding these stocks and only have 5% exposure into the stock. So this was my video on FL India. Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.